Steve Peterson of Infinity Investments, and welcome to our channel where we talk all things commercial and investment real estate. Now, in today's video, we're going to be talking about which type of commercial real estate is winning the game today. Today is September 2021. I don't want to say we post-pandemic because post-pandemic, I just don't want to say post-pandemic. In the pandemic or coming out of this pandemic, I feel like we're coming out of it, but who knows when and what and all that stuff. But during this pandemic and going forward, certain parts of the commercial real estate business have been hit hard. Certain parts of the commercial real estate business are doing very well. So I want to talk to you about what types of commercial real estate are doing great. And then particularly if you're exchanging, I love apartments. I sell a lot of apartments. That's my focus. That's my expertise. And a lot of our clients are exchanging out of apartments looking for other product types. So I'll talk about later in the video, if you're selling apartments, what are some good ideas of other commercial real estate that you can exchange into. But first, let's talk about it. I got an email, I'm sure many of you did today as well, from Marcus and Millichap, just talking about what food groups of commercial real estate are really doing well. And of course, apartment buildings are back white hot in the market. They took a little bit of a dip in the beginning stages of the pandemic, especially here in the Bay Area, where the shutdown was really extreme and we had a lot of out-migration. Essentially, a lot of people moved out of the Bay Area. And in fact, a lot of people moved out of the state of California for various reasons. But the pandemic was, the shutdown here was tight. It was real shutdown, all right? A lot of people didn't like that and wanted to take their talents somewhere else, and they did. And so initially, apartment buildings were not, and other commercial real estate, apartment buildings were not doing so great. However, second quarter of this year, we really saw from a street level, and I say from a street level, from a feet to the street level, main street level, we saw a lot of activity in apartment buildings. And that was confirmed kind of by this Marcus and Millichap report. They saw a lot of activity and new construction for apartments. But I do think it depends on where you are because, in certain areas like the Bay Area, while the apartment market has definitely picked back up very, very strong, it is not what it used to be in terms of pre-pandemic and the craziness that was apartment buildings. It is getting back. And you are seeing some interestingly low prices here and there for buildings that have challenging situations, particularly with tenants, all right? However, apartment buildings in general here in the Bay, in the state, California, and the country doing very well. Another sector, and probably the best sector, is industrial. Industrial, because of this pandemic, because of it, has even grown more. And I think the idea of online shopping really fuels the industrial market and commercial real estate. Here in California and other states also was fueling that is the cannabis boom, the cannabis industry needing space for all elements of their production, manufacturing, distribution, retail of cannabis. And a lot of those properties are industrial type properties, especially here in California. But just the growth of online shopping, and as we couldn't go outside and buy and go to the stores and the shopping centers, the fulfillment centers of the world, if you will, the distribution centers became very, very popular, and the need to warehouse products became very, very popular. Another sector that's doing very well is self-storage. Self-storage, in the Marcus Millichap report, they talk about how much self-storage has been built recently, and yet it is being absorbed. Even though there's a lot of product being built, the market, the demand is there. And I think when you see a lot of people moving, like we've seen over the last year, we've seen a lot of people moving, from places like California and New York to places like the Southwest and Southeast. Anytime when people move, they put stuff in storage. And we've seen that pretty significantly here over the last year. So those three product types are doing really well. The two product types that have been really hit hard are hospitality and retail. Office is kind of a mixed bag because it definitely was hit, but it seemingly has rebounded pretty quick. Retail and hospitality, well, not so much. And I think you're beginning to see the comeback within retail spaces. But the issue is things are changing. Things have been changing for quite some time. And I think with this pandemic, a lot of retailers who are opening their stores back are saying, hey, maybe we don't need as much space, so we can shorten our footprint. So maybe we don't need a 10,000 square foot store. Maybe we can do what we need to do on 5,000 square feet. Maybe we don't need 1,000 stores. Maybe we can operate with 500 stores and a couple more distribution warehouses or fulfillment centers, if you will. So the model is changing for retail. For hospitality, they are still figuring it out. People are back out there in hotels, just not at the rate that we were before. And it may take some time to get back. Office really is a mixed bag depending on where you're at and what type of office you're in. And I did a video recently talking about office because we sold 4 office buildings this year, and we usually sell a lot of apartment buildings. But believe that users, business owners are saying, hey, this is our opportunity to buy office and make a home for ourselves. And investors are seeing an opportunity and believing in that people are going to come back to work. And so they're more, optimistic about office buildings than they are about hospitality and retail. So a little bit of my, market update from the street level, Oakland, California, the Bay Area, and what I'm seeing. I pay attention to all the reports that are out there. Marcus and Millichap has a big report with their CEO coming up, talking about demographics and stuff like that. We all should tune into something like that, pay attention. Now, what I want to talk to you about now is if you do have multifamily, which a lot of y'all do, right? And you're thinking about, hey, either a couple things. I want to diversify from multifamily, or I want to get out. A couple of clients are like, hey, look, I'm ready to get out of multifamily. Or you're just looking for the next great opportunity. You've made a lot of money in multifamily, which many of you have, and now you're saying, okay, well, what's the next opportunity? I want to take this money and roll. Or, like a lot of my clients are saying, hey, it's time to retire, it's time to hang it up, or I'm busy, I don't want to manage these properties or manage the manager, so to speak. What do I do? So, a couple things that I'm seeing that I think make a lot of sense. First of all is the, kind of tried and true model of selling your apartment buildings and rolling over into a single tenant, triple net type property, or, multi-tenant triple net property. So a triple net property where the tenant pays their portion of taxes, property taxes, insurance, and common area maintenance charges can be a great way for you to roll your equity into another asset class where you don't have to have a lot of management responsibility, right? So you can you can sell your 10-unit apartment building, go buy a Dollar General somewhere. Dollar Generals, I bring that up because Dollar Generals are really hot. A lot of these Dollar Generals across the country, no matter where they are, even here in California, are trading at a 5% cap rate. And a lot of them just got built. So they got brand new 15-year absolute triple net lease where you're getting 5+% cap rate and you are getting true what they call mailbox money. Meaning that you're not having to go and deal with tenants, toilets, trash, none of that stuff. You're just getting the check in the mail every single month or direct deposit. Those can be great options. Here's a couple things you need to look out for if you're rolling into a single tenant triple net. First of all, what is the term of the lease? Right? I mentioned Dollar General. They have a bunch of brand new Dollar Generals that are on 15-year leases. Those are great. If you get a single tenant triple net lease and there's 3 years left on the lease, that can be very risky because at the end of that lease, if that tenant don't extend that lease, they don't renew their lease, then you could be dealing with some vacancy for quite some time. So you need to be aware of that. The second thing you need to be aware of is the location. A lot of times when you buy these things, up front, location is not that big of a concern because you're like, hey, I got this corporate guarantee. This corporation is going to pay this rent, or their stock price is going to take a hit, and that may be the case. However, if the corporation decides, we don't need 1,000 stores, we need 500 stores, as I just mentioned, let's just say, they might be willing to, default on that lease so they're making a better long-term move. And if that was to happen, is your property in a desirable enough place where you can go and find another single tenant triple net property? Or could you take that single tenant triple net and convert it to warehouse, convert it to apartments? Is the area vibrant enough that if that tenant you have now moved or didn't renew their lease, Could it be something else? Could it be released to somebody else? That's the feasibility and due diligence you need to do, right? Very, very important. Now, another product type that I think a lot of people can benefit from when they sell their apartment buildings is industrial properties, all right? Industrial properties may not have the single tenant, triple net appeal where you don't have to do anything, but the management is a whole lot less than you would have if you're managing apartments, because you're dealing with businesses, right? And a lot of these businesses want to be in there for a long term, so you're going to get at least 3 to 5 year leases, maybe 5 to 10 year leases. And this is what is in demand right now. And I believe that these are going to be in demand for a while because of what's going on in our economy. We're moving into this online shopping. We're moving into where the demand is there for distribution, fulfillment centers. So if you sold some apartment buildings and rolled into industrial, I think you could do really, really well. And that industrial also includes self-storage. The issues with industrial and self-storage are the price points. They're really hot right now, so it's hard to get a really good deal. Whereas like a single tenant properties, they're not as hot as they have been because they're retail, but you can get some really good deals right there. So in industrial self-storage is tighter, the deals are not there as much. And the last thing what I would say, this is a trend, I'm seeing a bunch of apartment owners, it's my own personal book of business, selling units, multi-units, and moving into office. All right. Now, I think there's an opportunity there, but here's a caution. Managing office buildings, while not the same as apartments, can still be tedious. And the load factor of some of these buildings can be outrageous. And also, when you have to lease units up, when a space goes vacant and when you lease it up, a lot of times there's a lot of work that needs to go in that space. A lot of times there's a lot of concessions you need to give when you are leasing that place up. In other words, giving several months rent free, you having to build out and do the tenant improvements. There's a lot of things that you have to do that in office that you may not be aware of, especially if you haven't done it before. So my advice, if you're going to be taking your units and exchanging up into a different product type, get educated on that product type. If it is like an office building or something like that that needs management, get a professional property manager who specializes in that kind of product. Get them on a job and just don't go in blind. You can make a really good move by doing this, but you need a really good team behind you and you need to be educated about what you're doing. All right, and I hope this helps. I hope you guys make it evaluation. I love apartments, by the way, and I think if you sold apartments, bought some more apartments, that's a great plan. But I see what's going on. I want to try to be on the cutting edge of what's out there and to keep you guys abreast of some opportunities that I see out there, particularly at this point in time when a lot of people are saying, hey, it's time to diversify or roll out of this multifamily. What do? These are just some ideas. I hope it was helpful. If it was, throw me a like, subscribe, share this with a friend. To the next video, best of success in your investing career. Peace.